Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. Go ahead and hit that like, subscribe, and notification bell if you're new. If you've been rolling with me for a while, hit the like button, okay? For those of you that are new, make sure you hit that all button, okay? I want to appreciate all of the newcomers as we learn and earn. All right, so let's get right into it. Let's get back to the basics, right? Back to the basics. So, there is a lot of options here in the stock market, and I always say there is not just one course to making money in the stock market. Okay, there's many roads to making money in the stock markets. Now, I'm going to say some things in this video that you probably haven't heard me say before, but I'm going to say them now. I am trying to get most of my positions and most of my dry powder and most of my cash, my dry powder, into the stock market, right? I don't care what's going on. I want to get most of it into the stock market. As a matter of fact, I want to get most of it into the S&P 500, Google, Microsoft, even Disney. I want to get it, Apple, into those type of companies, right? And as a matter of fact, the more money that I have into blue chip or the S&P 500 or the overall stock market, the less money I have to day trade. Now, remember, anything I say is not a suggestion for you to buy, hold, or sell, but I'm just telling you what my trajectory is for my investing, because I know that a lot of people came into this market knew you don't understand the entire picture. You know, there's a saying, when in doubt, zoom out. So, for instance, I don't want to be worried about risky stock. I don't want to be worried about highs and lows, if the stock market is going to be up or if it's going to be down today or next week or next month. As a matter of fact, let me show you exactly what I'm talking about. You know what? Let's go to the S&P 500. Okay, this is a really good lesson here. So hang with me. So as you can see, we have the S&P 500 here. This is the last 5 years, right? So a lot of you guys that are new to investing, that have been investing for under 5 years or since COVID, you just haven't really been shown these principles. And for those of you that have been investing, you already know. All right. So here's 2022 on to 2023. Let's just this don't give me the 2 year. All right. So let's just deal with this. OK. Matter of fact, let's do it this way. Let's just go from this last year. So this last year, you could see that the market is what? It's vacillating, going up and down and up and down. Right. And now we're back to down to October, right? And we have now surpassed the October lows, okay? So let's just go 5 years. So if you bought it here, of course, this is the S&P 500. Remember, for those of you that just want to buy it, one way to buy it is ticker symbol VOO, which is the S&P 500, top 500 companies, 500-ish, 503, 504 companies in the stock market, okay? So let's look at this, right? So if you bought here, now it comes down and then like, oh my goodness, what did I do? I bought it at the top, right? And then if you bought here, right, it runs up and then you go, wow, I made 8%. And then you turn around and lose 12%, right? But you tap out here, but somebody else sold here and they ride it back up another 16%, right? But somebody bought there and then they ride it down 16%. You see what I'm saying? And so it's back and forth and back and forth and back and forth. But let me show you guys something, what I mean about what I would like and why I would like all my money in. So here's why. For those of us that were brave enough to buy the S&P during the biggest fear in the last 10 years, which was COVID, right? Had you bought it here, look at that. The S&P was 2,300, which means that at the top, you would have been up 106% on something that gives an annual return from 7 to 10%, you would have been up at the highs 106%. You guys see that, right? So here's my point. If you buy down here and you ride it up here, then you're not worried about these ebbs and lows. Yeah, you're giving up a little bit here, but from here to here, you're still up 55%. So you're not really worried about these ebbs and flows, these ups and downs. Follow what I'm saying? And there's a lot of you long-time investors, you know exactly what I'm saying. And so here, let's take it further than that. And I'm going to prove my point to you guys, right? Let's just go max, right? So look at this back in 2008. And there's some people that are following me that have invested in the S&P back here in 2000. Look at this, 2011. So if you had the S&P in 2011, even when COVID hit, you were still up 100%. You guys see that, right? And so this is my point. This is a stair step up. Ebbs and flows, but it's a stair step up. It's parabolic. It's not a straight line. It just goes up and up and up. And at some point, you have to feel like you got it at the price that you could get it. No, you're not going to be able to get it back at 2009 prices. That's not going to happen. It keeps going up, just like the stock market keeps going up, GDP keeps going up, everything keeps going up, right? And as long as we still have GDP going up, everything else is going up in sync, the S&P will continue to go up. It'll continue to stair step up. And I just want you guys to get this message, this lesson, because at some point, especially for those of you that are starting early. Now, if you're older, this means a whole lot. But just think if you start this early, right? Just think for the people that started this in 2000. Just think of the people that was getting this back in 94. And now they are up 797%. They're not, if you bought down here, you're not worried about here, right? And that's what I mean. So now, yes, it does take away from your money, but you got it down here. So if it's fluctuating up here, the lows and highs, you're still good. So that's what I'm looking at, right? Because at the end of the day, you're not going to outperform the S&P. You're not. 98% of, well, 90% of you guys that are listening to me are not going to outperform the S&P. You're just not. So that's why I'm saying, for me, I would start now looking at where can I get it. And so what is your point, Larry? My point is, are you a short-term person, or are you a long-term person? Are you a short-term buyer, or are you a long-term buyer? All right. So listen, I shot a video a little while ago, and I want to go into it a little bit because I still want you guys to understand this lesson. I'm going to go back to this video that I made called How to Become a Millionaire with Low Effect, and it will be the end screen in this video. Let's take a listen. What I want to show you, the ticker symbol is VOO. It's Vanguard's S&P 500. And what is the S&P 500? Simply put, 500 of some of the top stocks in the world. So if you want exposure to Apple, Google, Microsoft, you could literally have exposure to those because some of those companies are in this fund. Follow? And so let's look at the performance of it over a period of time because this is extremely important, right? And so you could see year to date, it's down 13%. So year to date is down 13%, right? If you'd been investing in it for 1 year, you'd be down 9%. But look at what happens for those who continue to invest even during the downtrend. In 3 years, they were positive 10.8. In 5 years, still 10.92-ish, okay? You see here? And then 10 years, 13.29. So since its inception, about 13 years, the ticker symbol or the ETF, VOO, which is the top 500 companies, you have an annual return of 13.5%, right? If you would just simply keep investing and not stopping. So yes, I shot that video. I posted that one January 1 of this year. So it is older, and I want you guys to watch that entire video because I know a lot of you guys have not saw it, but it has a extremely important message in it showing you the power of compounding interest. You're talking about an annual return of up to 13% per year annually. And I also, in that video, take a calculator and show you the true power of compounding interest and how it helps to really ramp up building generational wealth. Really easy, set it and forget it, without just all of this constant searching for the right play where you can, just have this. I suggest that most of you have something like the S&P 500, literally 50% of your entire portfolio, especially if you're new, especially if you're young. The sooner you get started, the better you are, the sooner you will get to your goal financially, okay? Hey, you guys, make sure you check out the links below. Make sure you check out Stock Up You, learn how to trade, learn how to invest, spend hundreds and make thousands and tens of thousands. Do that, please, all right? For yourself. Stop jumping out of planes and then asking how the parachute works, all right? Learn how the parachute works first, all right? And then, of course, we got the Stock Squad. You guys come on and join the Stock Squad. We are giving all our best plays. And lastly, we got Moo. So those will be the top 3 links below in the description. If you're on your cell phone, just tap the title of this video, okay? Make sure you check out the links below. We'll see you later. Live, love, laugh, and learn. Oh yeah, and make sure you watch this video in its entirety so you could see the true power of compounding interest.